Okay, buenos tardes. Bienvenidos a todos. Welcome everyone here live in the room with us and those watching online. A pleasure to be here with you today as we speak upon pivoting a small business presented by Bank of America. My name is Ray Vasquez. I'm a Senior Vice President and Market Executive for our business banking group based in Los Angeles, California. And I'm really honored and pleased to be with you today. I just celebrated recently my 22nd anniversary with the bank, and so very proud to be here with you today. And also to serve as your moderator, as we do want to make this an interactive discussion. So as you hear things from our panel today, as you think of things that you're experiencing and seeing in your business, as we're all looking at the new normal, whatever that's becoming as we evolve through this pandemic. And so with that, let me share a few thoughts as we get started here. And so at Bank of America, we are a proud partner and sponsor of the U.S. Hispanic Chamber of Commerce. We especially want to acknowledge and celebrate here with you together as we have Hispanic Heritage Month. This is the 53rd year of what has become Hispanic Heritage Month. It started off in 1968 as Hispanic Heritage Day and expanded into a week, and now it's a month. So as Latinos, we need more than a day to celebrate, right? So we need the entire un mes, right? So here we are, 53rd year. And so at Bank of America, we do believe that diversity makes us stronger, and we as a company value this great opportunity when we bring together diverse perspectives, when we're able to meet the needs of our stakeholders locally and nationally. At Bank of America, we are proud to announce and invest over $1.25 billion over the next 5 years to address racial equality and economic opportunities, especially for minority communities of color, building and working with entrepreneurs throughout the country. And so this is work we have undergone for many years, and proud to share this $1.25 billion new initiative that we launched last year. At Bank of America, we're also proud to be the preeminent financial services provider to over 12 million Hispanic Latino clients in the country, with over 1 million being Hispanic Latino business owners. So very proud to be here with you, as I'm the son of an immigrant who is also a business owner for 4 decades, a brother who is a business owner, a compadre who's a business owner. All of us can tell stories about our families, how entrepreneurism is a vibrancy of our community, and how we come together here today to talk about how we can continue to grow and thrive. And so with that said, my pleasure to share with you a little background on our panelists who have joined us here today. And so let me start off with my colleague here to the left, Sergio Rivas. Sergio is a Senior Vice President and Small Business Performance Manager covering the state of Arizona, San Diego, and the Inland Empire region of California. He supports 7 market leaders and 91 local small business bankers, working with business owners and their companies with annual revenues up to $5 million in annual sales. Their mission is simply to help small business clients improve cash flow and to grow their business. The small business bankers provide strategic advice and guidance in credit and cash management solutions. Sergio has over 14 years in financial services industries. He joined Bank of America in 2011. He started as a small business banker and then market leader in Los Angeles. Prior to B of A, Sergio was a licensed banker with Wachovia Bank and also with Chase as a business banker. Sergio is a proud member of 3 employee networks at Bank of America. He's a member of HOLA, which is the Hispanic Organization for Leadership and Advancement, the Asian Leadership Network, and the Black Professional Group. Sergio is happily married and has 4 children. And fun fact about him, he's a Lakers and Chargers fan for those who are fans as well. So welcome Sergio.
Bolt up.
Next up, we have Chris Porro. Chris is a Vice President and Small Business Banking Manager based in the Inland Empire of California. He manages a local team of small business bankers who provide comprehensive financial solutions to the small business community with revenues up to $5 million. Chris has over 18 years in the financial services industries. He joined Bank of America in 2009. Prior to that, he was a sales manager leading a team of mortgage loan officers for Bank of America. He continued to grow his career and transitioned to be a director of business development for a local CDFI. CDFIs are community development financial institutions. He continued and returned to Bank of America as a client manager in small business banking, managing a portfolio of small business clients. He also became a credit solutions advisor, helping clients with their credit needs. Chris is happily married with 2 daughters and has a passion for playing golf and hockey. So welcome, Chris. Now, as we think about today's information and pivoting a small business, there's a lot that goes on in today's world that has changed so much over the last year and a half. You've all seen it, you've all experienced it, you've all been resilient. And so we think about today's topic in terms of how we can discuss what we've seen at Bank of America and what you've seen. And so once again, I'd like to make this an interactive dialogue. So as you start thinking of ideas, we do have our colleagues in the room here who have microphones, and towards the end of every session, we have Myra here on my right, Crystal here on our left. So you do have questions, please raise your hand. We'll be happy to come to you, once again, making this interactive. And so for today, we're going to cover really these three objectives. We'll start off with what we've been seeing, again, as you've all been working through pivoting your business. Second, we'll get into how we keep our businesses moving and thriving in the new normal and the new reality. And then ultimately talk about the resources available to us, right? Not only through just banks, traditional banks, but through our local government and various entities that are out there to help us. And so with that said, let's get started. And so what we really want to talk about today is getting into identifying what is core and what can adapt to be resilient for success. As we think about these topics of things that you've seen, we heard various speakers throughout this conference yesterday and today talking about new information, new data, new statistics around how everyone is making that transition, how everyone's pivoting. And so as we think about that, and you see the bullet points that are listed there, I won't read those, but we will unpack those here in a panel discussion with Sergio and Chris to really walk us through that and give examples of what we're seeing with our clients, with our communities, when it comes to these specific bullet points. And so as we think about that, you see up there on the screen about the hours, being flexible to pivot as a business, to look at your hours and how that is helping or harming your business and your operations. And so with that, I'm going to start off with Chris, and maybe Chris, based on what you're seeing with your clients and your small business bankers, what are some things you're seeing that some of the business clients you work with are doing in adjusting their hours?
Yeah, thank you, Ray. So one of the first things that we're seeing a lot of our small business owners do is they're adjusting their hours. And so they're pivoting away from being open 7 days a week, however many hours they're open, to more selected days throughout the week. And so I'll start with the story. We had a client in 2008 who found himself needing to either lay off his entire staff or close his business. Anytime any business owners finds themselves in that situation, that's the worst possible night. That's the worst possible time to be a business owner, because our staff is our business. We don't have a business without our employees, right? But so instead of closing and instead of laying off everyone, he did something different. He reduced the amount of hours that he was open. So he only opened Fridays, Saturdays, and Sundays as a retail location. He moved his staff to part-time to allow them to continue to work. And then what he found is after about 3 to 4 years, he was then able to go back to full-time and continue to grow his business. So that pivot at that time, the worst possible time in a small business owner's life, actually ended up being that adjustment, or refusing to close the business or fire his staff, actually ended up being a plus for him. One of the things that I do want to mention is, as a small business owner, identify the days you're most profitable. Take a look at which days you may be over leveraged with staff, minimize that staff, identify the days you're most profitable, and really focus in on there so you can continue to pivot your business and grow your business after we get through these challenging days.
Well, Chris, thanks for sharing. And obviously, as you think of your own respective business, whether you're providing a service or product, looking at that information in real time as best you can as far as where's the ideal point of efficiency. And so that really pivots towards our next point there, which is operating efficiency. As we think about having to reduce expenses, and we saw fluctuations in your revenues. If your top line is not growing like it used to be prior to this pandemic, of course, then you're looking to cut expenses. And so perhaps, Sergio, you can walk us through how you've seen your clients improve their operational efficiency.
Yeah, thank you, Ray. So a couple things that we've been seeing out in the field with our clients, and these things really cost you nothing to really be proactive with. And that number one is call your suppliers, reach out to them, see if they're willing to renegotiate contracts and terms that you have set up with them. In this environment, we're seeing that vendors are willing to have that conversation and see how we can work with one another and see how we can help one another. I would take that same approach with any other service that you're paying for on a monthly basis, whether it's a payroll service company that you're leveraging. talk to them. Typically they sign you up, there's discounts, there's promos, and then the pricing maybe, goes and increases. Have that conversation with them. Let them know that, you're shopping and looking to get improved pricing. Merchant services, right? As business owners, I'm sure you're taking credit cards as payments, and that's becoming a bigger expense, especially in this environment going online in a lot of cases. Have that conversation. Merchant service companies typically will sign you up for a 3-year contract, then the rates will typically increase and spike up after those 3 years. So really have those conversations. Let them know that you're shopping. You're shopping for a better rate. More times than not, these businesses are going to work with you to keep their businesses. I would say it is an investment in time. I know you're busy as business owners. Maybe give authorization to one of your employees to act on your behalf, to reach out to these companies, to have those conversations to help you negotiate the better rates and improved rates.
Absolutely. So I can imagine, maybe I'll ask you just for a show of hands, how many of you have been approached by your customers asking you to adjust your prices as they're trying to purchase at a lower price point, perhaps a service or product that you're offering? A show of hands, anyone had customers approach them saying, could you perhaps consider that? Okay, a few hands in the room here. So obviously, think up and down that supply chain, up and down, right? As you have vendors, as you have customers, everyone is approaching the other side of that equation and asking, what can we do to continue? So as you evolve through this time, it should definitely be something. Every service you have, you might need to reconsider. And in many ways, what we find in speaking with our clients is that perhaps they are not utilizing certain services, whatever that may be, right? Things from basic things as a cable provider service, through banking into merchant, like Sergio gave examples. Talk about with those providers of what they can do to help you during this time. And so ultimately, I'll close off this section and then open up to questions. But in this environment, everyone is having to really think differently, right? We're having to really understand what are the drivers, what are the factors. As we talked about already, if top line is being impacted in terms of revenue, then obviously the other lever you have to pull is your expenses. And so it's going to be a combination on those two factors of how you can affect your bottom line and continue to thrive through this. And so perhaps at this point, I'll stop here to see if there's any questions or thoughts that people want to share in terms of what they've experienced other than what we've already heard from the panelists. Any other comments or questions here we can ask? There's a question in the back there from the gentleman on the far right.
More than a question is another example. It was the case of it's a garage, it's a car garage. A client of mine that had a client that's supposed to be a repeating client, and when we were talking about how he dealt with it, he said I had to fire him. And of course, it's a group of business owners that we were dealing with, and everybody looked at him like, how can you fire a client in these times? When he explained that when he looked at the ratio, it was a repeat client, but the ratios were minimum, right? And he was always constantly, as you just mentioned, trying to hit him in cheaper and cheaper and cheaper, to the point he said, that's it, I can't do it anymore. So, but it's about thinking also differently, right? That yes, you can actually fire one of your customers. So,
yeah.
Great point. A client of ours did an analysis, construction company, and similar, found his break even in today's time versus what it was pre-pandemic, right? Because the factors have all changed. Redid his math and realized he did have to, in essence, do that with 2 of his clients, that it just was losing money on repeat business. So great point. Thanks for sharing that. We had one other question on this side of the room.
Yes, good afternoon. My name is Mark Moreno. I lead the Michigan Hispanic Chamber of Commerce, but I've got over 30 years of procurement experience. And so, yeah, similar to what you've shared, I mean, costs can be cut anywhere from, and this is what I did for the chamber when I took over in January of 2020, copy machine leases, go to your copy machine provider. I didn't get, any months for free. They just postponed 3 months of payments and just tacked it onto the back end, but it still was something. Or insurance, if you got officers insurance or insurance for your property, your inventory, and your offices, things like that. And unfortunately for me, I went to our landlord. We were renting space, and I asked him if he would consider, working with me on the lease payment, and the answer was no. And when the lease came up in April of this year, I bowed out And so we're continuing to work from home, myself and 2 other employees continuing to work remotely. We did it successfully for 12 months. Well, what's another 8 months? And we'll see what we can find here by the end of the year. The question I have for Bank of America, do you or did you, have you reduced your merchant fees during this time period?
Yeah, so like I had mentioned earlier, typically it's you're signing up for a 3-year contract, and we'll honor that. Once that 3 years is up, though, it's pretty standard across the industry that if you're no longer in contract, the rates are going to be at market price. And so, I would encourage you, if you are with us, you should have a merchant provider, a merchant consultant that you can reach out to. Reach out to your banker that will put you in contact. We can revisit that conversation and see what we can do for you to keep you as a client.
Well, thanks for those questions and those comments. And so ultimately, as we think through this, definitely want everyone to walk away with some points that are hopefully of value to you to share within your company or your local chambers. And I think we have one more question here in the audience.
Yes, if a company has operations in another country, could you take those into consideration for credit ratings or approvals or something, or everything has to be based in the United States?
Let me make sure I understand the question. So if the revenues and operations are overseas,
Right.
The question is?
If you take into consideration operations for overseas for providing credit ratings or lines of credit for a local U.S. corporation, if their parent company has numbers that they can show, or everything has to be based in the operations in the United States?
So when it comes to on the banking side, so from a lending perspective, we really, you would say, rely upon domestic receivables and inventory, right? The inventory has to be here in the United States as well as the receivables. So if those revenues and receivables are coming from a foreign country, obviously the bank is lending on the strength of the domestic receivables that we can, if we had to, collect upon, because every bank would file what's called a UCC filing, which is a Uniform Commercial Code filing on those assets, which are receivables or inventory. So if they're domestic, then obviously as a bank, any U.S. bank would be able to take, if you will, recourse on those receivables and that inventory. But if it's out of the country, it's very difficult. So most banks will not, there's some special circumstances, but most banks are relying upon really those revenues and inventories that are here for us to lend against. Hopefully that answers your question. Thank you. You're welcome. All right, well, thank you again for those questions. We're going to continue on here in the interest of time and start talking about another topic that we can hopefully get some additional questions and comments, but we all want to talk about really establishing a small business emergency fund more than ever, right? We saw that through this time of this year and a half, 2 years, that many companies were short on liquidity, right? We talk about a company have a cash burn, how much cash are they burning through in a time of period, how much do they have in reserve. So for example, if you had no revenues, no collection of receipts for a period of time, how much cash would you have to last? Would it be a week? Would it be 2 weeks? Would it be a month? How much cash do you have in reserve to survive a period where you're not collecting upon receipts? And so as we think about that, especially during the last year and a half, many companies did have to rely upon different programs. We'll talk about it to get further into the conversation. But in this idea of expenses and also emergency fund, perhaps what I can do is start off with our panelists here to talk about how we can analyze those core expenses. And so maybe I'll start with Chris to maybe give some examples of what you've seen.
Yeah, absolutely. So when we're looking at analyzing the core expenses, and I'm gonna ask the audience here to give me some core expenses. So a core expense for your business would maybe your rent. In your minds, what are other core expenses that business owners have? Payroll. What else? Medical insurance, health insurance. What else? Potentially advertising, but it may not be that core expense. But that's thank you for shooting that out. So we'll talk about that in a minute. Anything else? Taxes. So those are some of those core expenses that we want to see. And the idea is that you have at least 3 months worth of core expenses in your savings. So for some of you guys, it may be $5,000 a month and you need $15,000 in savings. For others, it may be $100,000 a month and you need $300,000 in savings. So it really depends on your business. But the key is to drill down your expenses to identify what's actually core to operating your business. Now, I'm a little bit of a storyteller, so I'm going to tell you a story. So every kickoff for the NFL, I do a big barbecue, but this year I didn't feel like barbecuing. So I ordered some barbecue from a local restaurant that we visited. And what I found was when I went to go pick it up, I asked where the staff was, and he said, I let them all go. I let go of my staff. And I'm actually going to close down my retail location because I pivoted to catering, and I'm doing so much better at catering than I am at this retail location with my staff. And so that business owner for himself identified he can actually reduce some of those core expenses or remove them entirely by removing his rent and removing his payroll. And now it's him and his wife that are doing the catering. He's actually making more money. So his revenue increased. So he's really pivoted his business. So the key to remember here is to have at all times 3 months worth of savings or 3 months worth of core expenses in your savings. Now the question for some may be, how do I get there? And it's really like climbing a mountain. And I will tell you, with my wife and I, one of us is better at savings than the other. I'm not going to tell you which one, but she has a lot more clothes than I do. And so we have to kind of work that out, right? And for her, savings may be like, oh, that's impossible. I'm never going to get there, right? And for me, I'm like, no, we can do it. But the key is to have a plan, and you have to start somewhere. And so as a business owner, what does that look like for you? So I encourage you, if you don't have 3 months worth of savings in your account today, start small. Just get in the habit and trust the process of building your savings. After a couple months, then really identify a plan. So if today you start with 100 and you need to get to 15,000, well, maybe you need to ramp it up. And you have that plan that you can follow consistently, just like climbing that mountain. And one day you will get to your goal or hopefully exceed your goal, and at least you know your core expenses will be covered. Right?
So definitely. So 3 months, obviously a good benchmark. Obviously, it'll vary based on your business model, it'll vary based on your industry, other factors. But rule of thumb, we definitely do think 3 months is a good starting point, and then build from there. So maybe, Chris, as we think about that further, as we think of, if you will, that ability to bring that together, what additional perspective could you share on that?
Well, I mean, it's really that step process, as I was kind of referencing to, it's really just start today, and then get to the point where you're building that routine to build your savings. And I know I kind of put them all together in analyzing your core expenses, but that key is that you follow that strategy, and then there's a third very, very important part of this step. And actually, I'm going to shoot it over to Sergio to share.
Thank you, Chris. Yeah, so, Ray mentioned earlier, I've been in the banking industry about 14 years, and here's kind of a key trend that I see. Business owners have an amazing relationship with their accountants and their CPAs. What I've also found is that a lot of business owners do not have an amazing relationship with their banker or their bank. And, Ramiro talks about it all the time. He talks about the bank is your friend. Right? And our associates, our bankers, they get compensated to help you. So trust me, they want to help you. Arturo from Elban talked about taking our businesses to that next level. Right? Well, having that relationship with your banker can put you in contact with a team of professionals to help you. Whether you're looking for a mortgage, we have someone in mortgage that can help you. Whether you're looking to get help with your small business, we have small business bankers. In this case, Chris was talking about savings, putting a plan in place. Well, we have a team of financial advisors that can help you. They'll take the time to understand where you're at in your life stage, where your business is at, what your plans are, and they can put a plan in place to help you and check on you periodically to ensure that we're going to achieve those goals with you. If you're currently at a bank where you don't have a banker, call your local office and say, hey, can you assign me to a banker? I want to have a meeting with them, see what the latest and greatest, your bank has to offer. Because we have the tools, the education, the access to capital to help your business get to that next level. Again, if you don't have a bank, your bank might say, hey, I don't have a banker to assist you. I would recommend you shop for a new bank and see where you're going to feel comfortable and see where you're going to feel like they have a team of professionals that can help you in your business along the way. On the screen it says commit. Chris mentioned to it, you got to start somewhere. And just like any plan that you want to be successful, have the plan, stick to it, execute to get the results that you're looking for.
Yeah, ultimately, in many cases, a lot of our clients that we see really put together their budget for the year, right? And that budget is only as good as the real time you take to incorporate those factors And so we've seen clients who put an annual budget together that's starting the year, and then of course by the end of the year they completely miss their budget because they're not reevaluating that, whether that's quarterly, semi-annually, in some cases maybe monthly. Obviously, this past 18 months has been something you've had to turn left, right, turn left, turn right. I mean, every day you had to do something different to get through this. So, as you think about that plan of building a 3-month reserve, looking at perhaps a budget, a forecast, whether it's through your bank or through your local SBA resources, they do provide, you would say, a forecasting budget tool, not only just for the P&L, but equally important, I'd say more important, your balance sheet. So you have to look at both sides, right? You're not just looking at one dimensional in terms of your planning. And back to Sergio's point is getting to your banker to talk about where you want to take this, because the transparency there will help you get to that goal of creating that emergency fund. Otherwise, it just doesn't happen on its own, right? We can all agree that if we plan for something and we communicate it, the odds of that happening, it becomes transparent, more visible, there's accountability there, you'll likely move towards it versus starting off with something beginning of the year, plan and goal, you're the only one who knows about it, you just don't get there by the end of the year. So just keep that in mind as you think about the opportunity to work towards that emergency fund. And so maybe just a quick show of hands, emergency business fund, is that something that's important to your business, to your company, to your organization? Is that something you value and you really prioritize? Okay, so we've got a handful of hands up. So ultimately, once again, I would share that as you're working with your bank, your accountant, your controller, your bookkeeper. Those are things that we see sometimes lacking when business owners will come talk to us about where they're at. And also, it's one of those factors that we can't always see what's around the corner, the visibility around the corner of maybe one of your customers that owes you receivables goes under, they file bankruptcy, and then that's where the emergency comes in and your liquidity dries up. Without that emergency fund there, it's very difficult to then go to apply from a point of weakness, right? You want to show the bank in advance of that you've got reserves, you've got a balance sheet. And so let me stop here and just check in with our audience. Any questions, comments you want to share, any best practices you've seen from maybe creating an emergency fund, or a question you want to ask here of the panelists? One up here up front, and we have Myra coming over with the microphone.
Thank you very much. Can you hear me? Okay. We heard earlier today, and I think yesterday, women are starting businesses, Latinas 5 times faster. It's thanks to great partners like Dan and the team here in Nevada and Las Vegas that have helped me move forward. Any national trends or things that Bank of America nationally is doing, right? As a working mom, a Latina, someone involved in my community, and someone trying to figure out how to continue growing my business or scale, like, are there anything specific that you have in the works in the future? And I'm sure Dan and the team will tell me, but I always just love seeing what's going on nationally through other chambers, other communities. Like, how do I learn from those best practices and stay ahead?
Sure.
Thank you.
Absolutely. So for our audience watching live, question is, what is Bank of America doing to help Latinas and entrepreneurs in general at the national level? And so as we shared earlier, and you heard perhaps at the lunch today, Angie Lathrop Garcia, she shared that the bank has been making an investment across the spectrum as part of our $1.25 billion. I'll share with you a few examples kind of on a national scene, and then obviously working here locally with Dan in the local market. And so as we think about where the intersect of access to capital and entrepreneurs coming into a starting of a business, one of the big things that we find is as you start up, right, you're getting your business plan, you're putting together your projections. Banks historically want to look at 1 to 2 years of established operations, usually 2 years in profitability. So it's a catch-22, right? You're not there yet today, but you will be based on your plan, your projections, and what you're going to do. And so what Bank of America has done is we're proud to be the largest investors of community development financial institutions, CDFIs. So CDFIs are basically entities. There's about 220 of these entities throughout the United States that do provide micro lending to startups that, once again, haven't got that fully established 2-year business. And so they will provide, in addition to looking at lending, they'll start off with the technical assistance, right? And so you can think of CDFIs as being a big part of that. We work with all the national ones. In California, where I'm based, we work a lot with Opportunity Fund. And so I would say that as an investor, we've invested over 1.5 billion into these CDFIs. We're the largest investor of any institution by 2 times over. So very proud of that. Another example is we think of the education side of things where you're trying to learn more about the latest data. So we've partnered with Alban and Stanford, right? They've got great data. You've probably heard other presenters talk about what Alban has done, including Arturo, who was on stage 2 days ago. And so we do have 2 programs working with them, one for smaller micro businesses, a virtual program, it's a 6-part series. We're actually just finished session 4. And with that, we are bringing in consultants to talk about the technology side of their business, setting that up, the accounting side, the legal side, and of course on the banking side, what we can do to help our micro businesses in real time through this pandemic. Once that's one partnership we can point towards with Alban and Slay, and then also for larger businesses through the scaling program at Alban, companies that go through an 8-week virtual program that they completed taught by Stanford Graduate School of Business professors. They earn a graduate certificate. And so what that does is in both sides of that equation of smaller micro to larger established companies, it's creating an ecosystem where they're doing, in many ways, with the scaling program, they're doing business with each other. And so that program is now graduated, I believe, over 500, maybe 600 alumni, Latinas who are graduates of this program. And so not only they learn the world-class information from Stanford, who's got the foremost research on Hispanic Latino businesses in this country, they're also bringing that academic, educational side, and they bring in alumni and pair them up with mentors. So it is trying to be part of our company, part of that ecosystem on the educational side. That's the capital, obviously, into what we do as bankers day in, day out. And so I would encourage anyone in the audience, obviously, to engage with your bankers again, whether it's with another bank or with us, to talk more about those resources, because every bank is making that investment. And sometimes I like to say, unfortunately, it can be a best-kept secret, not intentionally. But as you engage with folks like Dan, who's sitting here in the front row here locally in Las Vegas, he can certainly connect you with more insights on that. But thank you for the question. All right, we're going to continue on here in just of time as we start thinking about, and let me switch over to the next slide here. And really, as we think of a communication plan, right? Whether it's in good times and bad times or in times of crisis, we've got to have the ability to know how to communicate who we are and what we're doing. Just like the question I was asked here, what are we doing? How are we being intentional about making changes in what we're doing as a company? How are you being intentional with your company and making the changes you have to be successful to serve the community? And so as we think about creating a crisis communication plan, we certainly want to make sure that we can share some thoughts here from what we see at Bank of America. So perhaps I'll start off with you, Chris, just to talk about some of the things that you're seeing and that you can share here with the audience today.
Yeah, so we are here. So I'm going to give you 2 call to actions today for me. The first one is make sure that your savings, you got your savings built up and you're working towards that. The second one is really connect with your small business banker. And I'll, again, story tell a little bit. I don't know, as business owners, you may have received a call or an email from your small business banker saying, hey, it's me, I want to check in with you, I want to understand your business priorities. I promise you, our intention is just to learn about your business. Not to sell anything, not to offer any types of solutions without understanding your needs. And so that's the first thing. As a small business owner, how are you connecting with your clients? Do they know you are here to help them? To Ray's point, we have all these wonderful partnerships that can help Latina small business owners, all the small business owners that your bankers have relationships with. They can actually tell you when these opportunities present themselves to get you enrolled in some of these courses so you can further your education. They can connect you with some of the local CDFIs and some of the other partnerships that we have that will help educate you within your business. So that's step one is, do your clients know where you're at and how are you connecting with them? We leverage email quite a bit. My small business bankers make phone outreach calls to try to connect and have deeper conversations along with sending emails on a regular basis. And that way our clients know exactly where to find us. So should you need anything, you know where to go. And I'll kind of wrap that up with always have 3 people on your speed dial. It's your CPA, your lawyer, and your small business banker. Those 3 people should always be on your speed dial, and they should know your business inside and out.
Absolutely. So, once again, there's a lot of things we cannot control. Obviously, this pandemic has taught us that. Obviously, we can't control the economy. We can't control a lot of factors in the macro environment. One thing we can always control as business people is our communication, right, with our clients, with our constituents, with our community. And so let's make sure that the narrative about your company and yourself isn't being told to you by the community, but how you can engage the community and tell the story that you have. And so let's see, I think we have a question here in the audience. So let's go to the question, please.
Well, this question, I think you will love it, but I don't know if everybody thinks the same way, but we think that the bankers are always restricted to help. I mean, the executives in the branches or your positions are always restricted by the rules of the institution as far as how much you can lend, what type of services you can provide, because everything is defined nationwide. How can you give us examples of how you can make a difference by understanding the client better? Because my feeling is that at the very end, if you do not comply with A, B, C, D, it's very difficult that you really provide some help or support. But probably you have experienced other situations where you can really be able to help companies understanding who they are and where they come from and so on. Because you're saying, well, prepare for this, do this and that. Does it really matters at the end in order that you can propose a new program or offer a different line of credit or offer a different type of service?
Yeah, a great question. So obviously, as a bank, every bank is looked at from a perspective of that we do have an oversight of whether it's the OCC or the local state regulators. And so across all those parameters of fair lending and, of course, looking at how we can work with you, the biggest advice we can give is making sure that you are understanding the parameters and the needs of that specific loan you're trying to apply for. So, for example, if you're looking for a line of credit, a lot of business owners assume that a line of credit is a panacea. Just, I need a line of credit, I need a large one. What really underlining the need for a line of credit are the trading assets of your company. How much receivables, how much inventory do you have? Because most banks will look at typically lending maybe upwards of 80% against receivables, domestic receivables. Inventory, probably less, maybe 25 to 30% against your inventory. And so when there's information that we as a bank have to evaluate, and of course then share with the regulators, it's based on the presentation of information you're going to give to the bank. So in many ways, what I say is before you make that presentation to the bank, you should have the conversation with us to say, here's where I'm at today, a conversation about your revenues, your balance sheet, and be able to articulate where the growth is going to be this year, right? Because maybe today the need is X, tomorrow the need is going to be Y. And in order to support that as a lender, any bank is going to say, we're going to need to understand what is your financial quality of your presentation, meaning that many times there's information we receive that the income statement and the balance sheet don't reconcile. So there's basic accounting treatments that we have to look at and check. And so what I always say is, from a layman's perspective, understand that there are certain, if you will, rules of the game that we want to help you with. And so I would say start that communication and dialogue early and often. It's not always going to be a yes. I think the best bankers are going to tell you it's not a yes today, but here's where you could, as you grow, to see where it could become a yes based on the following conditions and based on the following performance. And so what I mentioned earlier, the projections of your company, the income statement, the balance sheet, in many ways bankers are going to say the financial statements are limiting not only for you but for us because we're looking in the rearview mirror, right? This is what already happened. The bigger story is where you're going to go with this, and also the connecting of what you're currently doing to where you want to go, because in many cases we see a big jump of expectations like the company's performing at this level, and next year the owner expects this. And that's okay to say that, but to connect the dots from where you're at today to where you want to go next year, we have to understand the assumptions behind it. So that's the dialogue part, right? How are you communicating your your product and solutions to the marketplace. Who are your clients you're going after? What's the industry? What's the market? What's the market share you're trying to win? So in many ways, you've got to scale and size up the opportunity of what you're going to do with your company, and then articulate that to us so that the financials, once again, rearview mirror, and the projections as to how and the connections that you're going to get there. So I would agree that there is always going to be a source of a bit of a catch-22 there when business owners approach a bank, because it's not always, if you will, 100% where you want it to be, but you can articulate your story. And so once again, at our bank or any bank for that matter, we will talk to you about that. And if there's gaps we see, we partner with the CDFIs, we do partner with SBDCs to talk about those opportunities. And for whatever reason, the bank cannot say yes, whether it's our bank or another. In many cases, the CDFIs are much more lenient. Those are the Certified Development Financial Institutions that would be able to do lending that aren't, as if you will, regulated like the same way a bank would. So therefore, another opportunity to look at that. And then as the company grows through that phase, be able to grow into a larger facility with the bank, such as ours or others. So hopefully that gives you some insight. See a question there in the far back right corner.
Over the past, well, I would say 11 years or more, there have been some lawsuits involved discriminatory lending practices by a few of the larger banks, which has increased that the government has increased the CRA regulations for all banks around the U.S. And me being a banker myself, I deal with that all the time. Unfortunately, when we try to help a multicultural market, a lot of the business owners think that we only do it because of a CRA requirement or just to check the box, right? We get heavily regulated in the banking industry by having to lend to minority business owners, number one, and also to actually lower mid-income individuals. What is Bank of America doing to kind of break that stigma that banks only want to lend to Latinos or African American to meet the CRA requirements? What are you guys doing to show that you really care about the small businesses, that we're not really a check the box? Because I think that what you guys do, it's great, but still the business owners, they're actually skeptical, okay, why do you want to help me, right? Why are you spending all this money? Why are you giving so much money to all the nonprofits? Is this just a CRA requirement, or do you really care about us? So what are you guys doing about that?
Yeah, absolutely. Great question. So how does Bank of America serve the Hispanic Latino community and not, if you will, do it because of CRA requirement? I would say that in my opening comments, we have just over 1 million Hispanic Latino business owners as clients of Bank of America. So we're very proud of that. And you think of the universe here at U.S. Hispanic Chamber, we share there's about 4.3 million Hispanic Latino owned. So there's your market share. We have the largest market share, and I would point to that as the evidence that we are working with our Hispanic Latino community in banking them. Doesn't mean that's a yes for everybody, clearly, but it does mean that we are intentional. I think the biggest factor I see is that we do reflect the communities that we operate in. I'm a proud member, a board member also of the California Hispanic Chamber. And so many of the things we try to do is make sure that we reflect the culture, the language set. At Bank of America, we do have a certified Spanish language skill set course we put our bankers through. And so in many areas that are Hispanic Latino population, we do have certified Spanish-speaking bankers who can communicate in terms of banking and qualifications, but also have the cultural sensitivity. So I'm very proud of that. I also happen to be a member of Bank of America's Hispanic Latino Executive Council. We were founded in 2013. We're a group now of 200 senior Bank of America executives who meet really every quarter to talk about one is our ability to attract and hire talent within the company so we can be part of the community authentically. Second, we talk about our community of clients, how we can better serve them. And then third, how we work with partners like the U.S. Hispanic Chamber and nonprofit organizations. So throughout that spectrum, our most senior leaders are participating in that. Our CEO, Brian Moynihan, is definitely a big supporter of that. So I would say across the board, we can always do better. I agree with you there. But ultimately, we believe that our ability to continue to serve the community and grow that market share, we're very proud of, is ways that we can continue to refine how we look at lending. But to the point made earlier, there are oversight that we're having to comply with, not just us, but every bank. But I would say that where I've started my career 27 years ago to where I'm at today, I've seen strides. Doesn't mean we're there. That journey is never over. But I would say ultimately, I encourage you to reach out to any of us, whether it's with our company or another bank, to talk about that, where you've seen the gaps and how you need their help. That's a real conversation for sure. Thank you. Interest of time, we're going to move on here. Here's what we're going to do here. I'm going to ask everyone to stand up and stretch to get the blood circulating. If everyone can stand up for 10 seconds. I know you had lunch. We have a little bit of a food coma going on. And while you're stretching here for the next 10, 15 seconds, let me ask, raise your hand if you want to share with you the funnest part of the convention thus far, yesterday, today. Someone want to share a quick experience, a quick testimonial as with our audience who's watching virtually. Someone want to share a quick highlight of the conference, something you enjoy that you walked away with, someone who spoke yesterday or today, or maybe a factoid or someone you met. Someone want to give a testimony really quick here and during the stretch break, right up front here. Thank you.
I was just tweeting about this lady who I met at the previous session. Her business is called Happy Tamales. I don't know if anyone was in that one. Yes, I just tweeted about Arizona Chamber. So she pivoted her business plan as a small business owner. And while she was doing that, she also, for every dozen tamales she sold, she gifted another dozen to first responders in her community. And I thought that was just so powerful. And I went and said, thank you. And she gave kudos to the chamber as well. So it was just very heartwarming to hear a Latina in business and just how we figure it out and we hustle and we keep going. So
Awesome.
Thank you.
Well, thanks for sharing that. Well, great to hear that. I wish I could have a tamale right now. I'm just getting hungry thinking about it. That being said, thank you for stretching. We're going to continue on here. Thanks for taking that stretch break with us, and keep the business moving as we continue our session here today. And as we think about this next section here, and we heard some statistics earlier during the lunch break from the U.S. Census Bureau, and it's interesting, very similar to perhaps 4 areas we've seen as a bank. We all know that during this time, during the coronavirus, we saw really 4 major disruptions. One was, of course, in employees, hiring and retaining employees, right? Second, we saw fluctuations in our businesses, right? The revenues and expenses. Third, the workplace environment, right? Became virtual, working from home. And fourth, supply chain, right? And increase in prices. So that was just shared with us with the U.S. Census Bureau at lunch. And those are some of the topics we wanted to discuss during this session. And so as we think about how the coronavirus has changed and things that we need to consider, and so I'm going to start off here with our panel again to talk about what we can share with the team as examples. So maybe, Sergio, I'll start with you.
Yeah, so, a couple things here. You see on the screen here, there's some components around reaching your clients online, social media, a couple things. Number one, your website. Keep it up to date in this environment. Whether your hours have changed, whether you have delayed deliveries, maybe inventory is low. Let's make sure you're keeping your clients up to date. I'll give an example. A few weeks ago, my family and I, we have a tradition of ordering pizza every Friday night from our favorite spot, and they're always busy. Well, I called 3 times, they didn't answer, and I panicked, and I'm like, oh my gosh, the pandemic got them. And I was like, this ain't right. Something's up. I go to my phone, go to Google, and I search for the business, locate them. And sure enough, they had an update on there. They actually had closed for 7 days. And on the note, it said, we've been short-staffed during the pandemic, and our employees have been working overtime. And they decided to close the shop for 7 days and gave the clients paid time off during that time. And so it was a feel-good moment, to see that, one, it let me know they're still open, but two, they're giving back. They understand we're all in this together, and they're pivoting as well and giving back to their associates. Email marketing it works. It's huge. If you're not comfortable, if you're a business owner, you should be in contact with your business clients or your clients on a weekly basis. And if you're not comfortable with emails, there's companies such as Constant Contact, MailChimp that can help you write those emails and market to your clients there on a weekly basis. I'm a sucker for email marketing. Macy's, one of my favorite stores, they send me 2 or 3 emails a week constantly, and I delete most of them, but guess what? When I'm ready to buy some shoes, a suit, maybe whatever the case may be, I can click on the link, get a coupon, and take advantage of that discount. But don't feel like you always have to give the discount. Sometimes it's just about staying connected with your clients. I had my AC repaired a couple months back, and last week I got an email from that AC company. It was just on tips and strategies to help lower my electricity bill. You know, my wife is a real estate agent. She sends emails on market prices and housing and what's going on, but she also sends, you know, tips on ways to improve your home value. She sends, maybe during the holidays, some of her favorite recipes. At the end of the day, it's just about staying in front of them and staying connected with them, just so that when they do need something, your clients need something, you're top of mind, they think of you, and they're more likely to come back as repeat clients.
No, thanks for sharing that, and definitely I would say that all of us, either as consumers or as business people, the email traffic has increased, and that was intentional by those companies to stay at least virtually visible to you, right? That they're still there, and we stopped going to the stores, we stopped going in person, and so definitely those companies that were intentional about it, I bought more from, actually. You know, and whether it was conscious or subconscious, it was always on my phone. Like, oh, here's another alert, here's a discount code. Great, let's order that, because I was thinking about that. So consider that for how you've done that for your respective organization, your company. So maybe I'll turn to Chris here to perhaps talk about a little bit social media and importance of things that perhaps we should consider.
Yeah, absolutely. I mean, social media has changed the way we market and the way we accept marketing into our worlds. There's 18-year-olds making millions of dollars marketing on social media. That's where people are going to buy. I know myself, shoes as well. I was up late one night and I found out I like Cole Haans, and they were having 70% off the shoes, so I bought 2 pairs because I can get 70% off. They're still sitting in the box in the closet. I didn't even need them, but they're 70% off, so I wanted to take advantage of the sale, right? But those are 2 pairs of shoes I wouldn't have bought. I wouldn't have gone to the store and purchased them, but I did it from the comfort of my couch. And so the marketing in social media and YouTube, there's a huge market there. And if you're not comfortable with it, I'm sure there's someone that you can connect with. I know there's social media managers and influencers. And so really find what niche you want to get into. And I promise you there are YouTube videos or Instagram or Facebook marketing available for you to leverage and get in front of your clients.
I'll share an example with social media. One of our clients hired an influencer on TikTok. So how many of you have used TikTok, or children? I have children who use TikTok all the time. And so he wanted to get into that niche of the younger generation for his product, which was actually kind of a niche high-end car wash, car soap. And so he hired this influencer out of, I believe, Miami. And probably within the course of a few months, he saw this big jump in that demographics of younger buyers who were following this influencer. And obviously, I won't get to the details of the cost, but he did have to outlay some funds, and then saw that come back within time. So I think now it's been 6 months since he's had it, and that's probably the fastest growth segment he's seeing right now, is through that influencer for that younger segment of population. So just something to think about. So I'm gonna ask the audience here, and it's really important to think about this. During this pandemic, we weren't seeing our customers in person. In many cases, we were either doing some type of Zoom or some type of Microsoft Teams, WebEx, you name it. But how did you communicate otherwise, other than maybe setting up a meeting like that? How many of you actually have all your clients' emails? Show of hands, you have every client that you work with emails? Okay, a few hands went up. How about your clients' cell phones? Okay, a few hands. And so it's something that we learned as we were engaging with our clients, is that in our CRM systems, our customer relationship management systems that you have or we have, we found, if you will, fields that were empty. We didn't have the cell phone. We had the office number. Well, guess what? They're all working from home. No one's there. Okay, so then you're emailing, you hope they respond to you, and it would take probably a few days before they go back. Oh yeah, we're still working, but we're out home. And of course, say, could we please have your cell phone number? And you have mine, but I don't have yours. So something that I can share that we did have to go back and really retrench around that. I think by now, hopefully, everyone's got those emails, those cell phones, so that you can continue to communicate, and vice versa. I think all of us now have it on our business cards, and we put it in our emails. So just something that I can share that has helped us continue to communicate. As we come towards the last section here, as we think about that access with different government and local programs at the city level, the county level, the state level, and then up to the U.S. federal level. Obviously, there's a lot going on, and I'll start off here with just going to the next slide and talk about, we've got some great resources here on this page that I'm sure many of you have seen, at least on the left-hand side. And so, show of hands here, how many were able to participate in the Paycheck Protection Program? It's something that we saw a tremendous amount of clients who come into it. At Bank of America, we were proud to participate in lending over $30 billion, and average loan size was under 100,000. So really helping that small business community. And so as you see there, won't go through these line by line, but under the SBA.gov, through the PPP program, a lot of people got re-engaged, refamiliarized with the SBA, and as we pivot towards the new normal, they do a lot more than what we just went through, right, with PPP, which was critically important, right? It really kept us, a lot of businesses afloat. If you saw some of the presentations earlier in the conference yesterday and today, they've shown where a lot of companies leverage that and were able to keep their liquidity in their business. And so also a quick plug here for SCORE. SCORE is another resource closely aligned with the SBA. And it's really an organization of retired business executives who have run companies, and something that perhaps as you graduate as business owners into retirement, maybe you want to participate in SCORE and help the next wave of business owners who come in. But for today's audience, if you're also looking to get more additional resources, more tailored to a business person themselves, because that's who's working there and with SCORE, that's their website. They are mentors. They do provide a real world experience and education that perhaps sometimes can be abstract when you go through some of the other programs that you may encounter. And so with that, I'm going to pivot to Chris maybe to share on the right-hand side of the screen. We do have some Bank of America resources. So Chris, maybe if you can share some thoughts there.
Yeah, so one of the first resources that we leverage is the Minority Business Development Agency. When we're looking for our minority business owners, their entire role and responsibility is to help minority business owners gain funding. And so that's one of the resources that our bankers leverage. But I think, Ray, I apologize, I think you're talking about more at bankofamerica.com. So we have bankofamerica.com small business that you can go in and identify the resources for yourself and research and read. And there's a lot of great information within the website. And again, I would strongly ask you to leverage your small business bankers because they can help lead you there. But I highly recommend that you do go visit the website.
So you see two websites there on the Bank of America side, bankofamerica.com/SBR, Small Business Resources, and also bettermoneyhabits.com. Better Money Habits was developed with the Bank of America and Stanford professor about a decade ago for individual consumers, and then graduated into for business owners. So part of today's presentation really is based on the Better Money Habits that we've developed. And so check out that site, some great resources there, some tools that you can leverage for your own company. And so with that, I'm going to pivot now towards the next slide here. And I think, Chris, this is where maybe you want to share some more insights.
I skipped ahead a little bit. So MBA I just shared about. But so CDFIs. CDFIs are community development financial institutions, and they can help you obtain state grants, SBA, EIDLs, or they help with the PPP. CDFIs are great nonprofits that sole responsibility and sole purpose is to help small business owners. So Ray had mentioned earlier, our credit appetite may not be a perfect fit for startups, and CDFIs can help there. They really are helping with those underserviced clients that don't quite fit that credit appetite for the banks. And then what happens is through our relationships with them, we then can, after your 2 years or after your financials meet our appetite, then we can take over the relationship. And so we have very, very strong relationships with a lot of local CDFIs, and your small business bankers would be able to introduce you to some that can help you. Additionally, SBA. So SBA is been a big name over the last 18 months with the PPP. Additionally, the SBA EIDL loan. And I don't know how many small business owners are aware of all the products that SBA does, but SBA allows us to lend to our clients and allow them to put less down, whether it's equipment, whether it's a working capital express loan or a commercial real estate deal. For example, show of hands, how many are aware over the last several months, SBA had a program where they waived the first 3 months payments for our SBA 7A loans. Not only that, they waived their fees. And this wasn't added to the back of the SBA loan, they waived the payments. So if you needed a loan for equipment, the first 3 months are paid for you. Same thing with commercial real estate. We're talking about millions of dollars in lending here. And so those are some of the things that your small business bankers will share with you and keep you updated on all the great things that SBA is doing and help you navigate which product is right for you. Additionally, maybe SBA isn't the right fit. And your small business bankers really will share a calculator for you that will show you, should I go SBA, should I not go SBA, what's the right fit for my business and where I'm trying to go. But it's a great program, a great agency.
Chris, thanks for sharing those sites on the screen there. And may I, Sergio, add on to a few more options and resources there. Sergio?
Yeah, thank you, Ray. So I'll cover local funding, the grants.gov and accion.org. So local funding, think of local grants, think of the city, county, and state where your business resides, where you reside, and see what's available, what funding options are available for you. Keep in mind that there's pools of money available. They go fairly quickly, so it's in your best interest to just continue to check those regularly, maybe monthly, to see what is available for you. In particular, there's a lot of focus on minority small business owners as well. So easy way to take advantage of local grants is just kind of staying on top of what's available for you locally. When we think of federal grants, think of grants.gov. It's a phenomenal website. There's thousands of grants that may be beneficial to you and your business. These grants are awarded to businesses that may help the government stimulate the economy. What I appreciate the most about grants.gov is not only do you apply on that site, they have instructional videos on how to apply. They have instructional videos walking you through the process A through Z, grant writing videos to educate you. So they really want to give you the best chance to get a grant. Lastly, accion.org is a nonprofit organization. It's a micro lender. They do loans from as low as $200 to up to $300,000. They are in 50 states, so wherever you're located, good chance that there's an Accion office that you can leverage. And I personally have referred clients in the past to Accion. Some of these clients were maybe startup. They weren't able to qualify for the traditional financing and lending through us. We referred them to Accion that was able to get them the financing that they needed to get their business up and running. And 2 to 3 years later, once they've been established, they have a couple of years of tax returns, they're profitable, they were referred back to us to help them with the traditional banking that we offer. So really take advantage, peek at those sites and see if some of these sources are the right fit for you and your business.
Yeah, absolutely. So as you look at that spectrum, right, there is a spectrum of lending that's available to you. It's not always going to be with your bank, right? Obviously, that's the ideal. And once again, to the questions posed earlier, that open and honest dialogue with your banker, just like you've been selected by your clients to work with you and up and down that chain of revenue. Same thing with your banks, right? Talk to your banks, find those resources, and if they can't give you those resources, then you need to look for other options, right? I've on my side with working with my colleagues here in small business, we always want to make sure that if we cannot say a direct yes, that we give you options that we have here presented. I've had the pleasure of serving myself on a CDFI board. I've also served on a CDC board. And so many times we do work with those organizations. Our banks, all banks are supporting those organizations. And so once again, finding that right banker who can give you that spectrum of what is possible for you is really gonna be critical for you in terms of that growth. And so as we think of today's session, we covered a lot of topics, a lot of information. We like to believe that there's a lot here that all of you can take away something that you gleaned from the conversation. And ultimately, it's the old adage, right? It's one step at a time. It doesn't happen in one step. It doesn't happen in one day. And so as you think of where you're at today, perhaps figuratively or looking at the illustration there, you're in that step where we are today. And that success factor, whatever that's going to be, I think the biggest gap we sometimes find, and some of the questions addressed it earlier, is being intentional about what it is that you want to do, being able to articulate that, and tell your narrative, tell your story, and also show that in terms of your ability to quantify it with projections and assumptions, because that's sometimes the biggest gap we'll see is as business owners come into us. It's hard to make that first impression a second time, right? You come into a bank not prepared with the information, how you want to articulate, how you want to be perceived, how you want to show that you are ready to achieve that success, and that you're looking for a partner in a bank such as us, or any bank for that matter, to be a part of it. And we do. That's without clients, we don't have a job, and all banks operate in that premise. So know that you've got that ability to communicate what it is that you want. And so as we wrap up here this session, I do want to thank you. But before we wrap up, I do want to open up here if there's any final questions or comments that want to be shared by the audience. We'll take one last look here at the audience, and I know we're at the bottom of the hour almost. And if not, just want to say then, we thank you on behalf of Bank of America for your participation today in the U.S. Hispanic Chamber of Commerce. We hope that you came away with a lot of great information. If you have any questions, feel free to reach out to our local bankers who are here. I'll have them raise their hand in the back, and on the side, they're microphone runners. So any of our Bank of America colleagues here can help you locally. But thank you again. Enjoy the rest of the conference, and let's have a great gala tonight. Thank you.
Thank you. What's that?